Ever wondered what it means to be a shareholder? Well, it's quite the adventure, full of intrigue and opportunity. Let's decode the mystery, shall we? Imagine a giant pizza sliced into several pieces. Each slice represents a share, and the whole pizza is the company. When you buy a slice, or in this case, a share, you own a piece of that delicious pizza pie, or rather, you own a fraction of the company. This concept is what we call shareholding. By purchasing shares, you're not just buying a piece of paper or a digital entry, you're buying a piece of a company's future, its potential successes, and its profits. You become part and parcel of the company's journey, sharing in its growth, riding the waves of its performance. So, when you buy a company's stock, you become a fractional owner. Intriguing, isn't it? Now, you might be asking, what does owning a part of a company mean for me? Well, let's delve into that. Being a shareholder is like being a part owner of a company. You might not be making the day-to-day decisions, but you're still reaping the benefits of the company's successes. One of these benefits is dividends, which are essentially your share of the company's profits. When a company does well, they might decide to distribute some of their earnings back to the shareholders, and that's your dividend. It's like getting a slice of the company's success pie, but dividends aren't the only way you benefit. There's also something called stock price appreciation. In simple terms, it's when the price of the company's stock increases. So, if you bought a share of a company for $50 and the price goes up to $70, you've just made a $20 profit per share if you decide to sell. However, remember, the stock market isn't always a one-way street to riches. Companies can face challenges and stock prices can go down. But as a shareholder, you're not just betting on a company's success, you're part of it. You're part of the highs, the lows, and everything in between. Thus, as a shareholder, you're not just an investor, you're a part of the company's success story. But how can being a shareholder shape your financial future? A good question indeed, and the answer lies in understanding the power of stock ownership as a wealth-building tool. The magic behind this wealth-building opportunity is the concept of compound interest. Picture this. You're planting a tree. The first year, it might be just a small sapling. But as years pass, it grows and expands, casting a larger and larger shadow. Now, think of your investment as that tree. The money you initially invest is the seed you plant. Over time, the returns you earn get reinvested, and they too start generating returns. This is compound interest. The process where your wealth doesn't just grow, but it grows exponentially. In the context of stock investments, it means your share value and dividends can compound over time, leading to substantial growth. Now you might be thinking, great, I'll start investing and be a millionaire by next week. Well, not so fast. Remember our tree analogy. A tree doesn't grow overnight and neither does wealth. This brings us to the importance of long-term investment and patience in reaping the benefits of shareholding. Stock markets can be unpredictable and may fluctuate in the short term. However, historically, they have shown a tendency to rise over the long run. By holding onto your stocks for a longer period, you allow your investments to weather short-term market volatility and grow. It's like letting your tree withstand the seasons to eventually become a sturdy oak. Moreover, as a shareholder, you're not just a bystander in this process. You're an owner, sharing in the company's growth, success, and profits. The better the company does, the more your shares could potentially be worth, and the higher the dividends you might receive. It's like owning a piece of a flourishing orchard, enjoying both the view and the fruits of your labor. So, stock ownership isn't just about making quick money, it's about building long-term wealth. And remember, every great oak tree starts from a small acorn. Or in this case, a well-considered investment. So, how does one become a shareholder, you may be wondering? Well, it's simpler than you might think. The journey begins with buying stocks, which are essentially tiny pieces of a company. You can do this through a stockbroker or an online trading platform. Think of them as the gateway to the world of investing, the bridge that connects you to the stock market. Now, you can't just dive in blindly. Remember, with every stock you buy, you're purchasing a piece of a company, so it's crucial to know what you're getting into. That's why researching a company before investing in its stocks is so important. Look at the company's financial health, its past performance, future prospects, and the industry it operates in. These factors can give you a pretty good idea of whether or not the company's stock is a sound investment. And don't forget, learning doesn't stop once you've made your first purchase. The stock market is a dynamic, ever-changing landscape, so keep educating yourself. There are countless resources available to help you understand the stock market and investing, from books and online courses to podcasts and financial news outlets. Remember, the path to becoming a successful shareholder starts with knowledge and understanding. So, take the time to learn, make informed decisions, and embark on your journey in the world of investing. Enjoyed this video? Give it a thumbs up, share with your friends, and don't forget to hit that subscribe button for more content like this.